So you've seen the charts, right? You hear all the crazy jargon, and you can't help but wonder if you're missing out on the wild world of crypto trading. Well, in the next few minutes, we're going to give you the basic map and compass to help you navigate it all. Let's dive in. I mean, bulls, bears, rockets to the moon, humps and dumps. The crypto world can feel like this chaotic theme park where everyone's speaking a totally different language. But believe it or not, behind all that noise, there's actually a logic, and we're here to find it. So that's what we're going to do here. We're going to cut right through all that noise. By the end of this little guide, you'll have a simple framework to go from feeling confused to feeling confident, one step at a time. Okay, first things first. Before you can even think about playing the game, you got to know who's actually in the arena. And maybe more importantly, you need to know where you fit in. So, first up, we have what's called the hamster. Now, this is a bit of slang you'll hear a lot in some crypto communities, and it's basically for a newcomer, someone who's super enthusiastic but maybe trades more on emotion than on strategy. Look, if you're just starting out, this is you, and that's totally okay. Every single person starts out as a hamster. All right, so now that we've got that sorted, it's time to learn the language. Because really, to understand the market, you have to be able to speak its dialect. The entire market is basically a huge battlefield between two main groups, the bulls and the bears. Think of it this way. Bulls are the optimists. They buy stuff hoping the price will go up, just like a bull thrusts its horns upwards. Bears, on the other hand, are the pessimists. They're betting on prices falling, like a bear swiping down with its paws. This constant fight is what drives every single price change you see. Okay, but sometimes that price change isn't exactly natural. That's when you get a pump. This is when a group of people conspire to artificially inflate a price by buying up huge amounts all at once, creating a ton of hype. And what goes up? Well, it often comes down. That's where the dump comes in. It's the inevitable follow-up. That same group that pumped the price up suddenly sells everything at that new high price. This causes a massive crash, and usually leaves the newcomers holding totally worthless bags. But hey, it's not all doom and gloom. When price growth is legit and just absolutely explosive, you're going to hear one phrase shouted from the rooftops to the moon. This is like the ultimate rallying cry for an asset that's just experiencing these incredible soaring gains. But seeing that rocket take off, man, that can trigger a really powerful emotion. FOMO, the fear of missing out. Seriously, this one feeling is probably responsible for more impulsive and irrational decisions in trading than anything else. And we'll definitely be coming back to this idea. Okay, so we've got some of the slang down. Now it's time to actually learn how to read the map. And in the world of trading, the map is always the price chart. Let's be real. You look at one of these charts for the first time, and it's just this chaotic mess of lines and colors, right? So how in the world do traders see a story in all that noise? How do they even begin to predict what might happen next? Well, here's the secret. Prices, they don't usually move in a completely random way. A lot of the time, they travel within a kind of channel. The bottom line acts as a floor, we call that support, where the price tends to bounce up. And the top line is the ceiling, or resistance, where it often gets pushed back down. Just spotting this channel is your first big step to taming the chaos. And an uptrend? It's not just a line going up. It has a very specific structure. So once you've found that floor and ceiling, you look a little closer. Is each dip or each low point higher than the one before it? And is each peak or high point also higher than the last one? If you see that pattern, higher lows and higher highs, you've officially spotted a healthy uptrend. Okay, so spotting a trend is one thing. That's great. But the real skill? It's knowing when that trend might be about to change or even reverse. And to do that, you need to learn to recognize the market's body language, its signals. And you know what's wild? History actually repeats itself a lot on these charts. Over the years, traders have noticed that prices tend to form these predictable shapes or patterns that can give you a clue about what's coming next. You can really think of them as the market's little tells. Let's start with a super classic and simple signal, the hammer. You'll usually spot this at the bottom of a downtrend. It looks just like it sounds, a small body on top with a long tail hanging below. What this little shape is telling you is that sellers tried really hard to push the price way down, but the buyers fought back and hammered it right back up. It's a potential sign that the tide is about to turn. All right, here's another big one for you, the engulfing pattern. This one takes two candles to form.
When you see a big candle completely swallow or engulf the body of the smaller candle right before it, that's a signal of a really strong shift in momentum. A huge green candle engulfing a little red one, that suggests the bulls just took complete control.
So we've talked language, we've talked trends, we've talked signals, but honestly, all of those tools, they're kind of useless without mastering the final and I'd say most important piece of the puzzle, your own mind.
Yeah, this quote right here, it just nails it. Emotional discipline is the path to success. You can memorize every single chart pattern in the book, but if your decisions are being driven by fear or greed, you're not trading, you're just gambling. This is really where the rubber meets the road. You have to master your own mind. Before you make any trade, stop and ask yourself why. Is this part of a strategy, or are you just chasing a soaring price out of greed? Are you selling because your plan told you to, or because you're panicking? That FOMO we talked about earlier, that's your number one enemy. Real long-term success is all about disciplined strategy, not emotional reactions. So look, we've gone over the language, the map, the signals, all the external stuff. But the biggest challenge isn't on any chart, it's right between your ears. And that leaves us with the most important question of all. Are you ready to control your emotions, or are you going to let them control your money?